Matt, you're the executive chairman and co-founder of Cleanspark, an energy company that has pivoted to becoming a Bitcoin mining company. So tell us a little bit about how you moved from being primarily about smart grids all the way to crypto mining. How'd that happen?
It's one of those things, right? Butterfly effect. If anything changes in the past, it affects where we are today. So um, we had our technology. We have a portfolio of patents surrounding microgrids, which is like the main macro power grid, but on a much smaller scale. So you have generation and storage. You have controls that make decisions when to send power where. The idea behind a microgrid is basically threefold. You're looking to increase efficiency, um, reduce greenhouse gas emissions, increase resiliency so lights stay on, or decrease costs. So we really cut our teeth in the military complex, working with Marine Corps Base Camp Pendleton, designing microgrids for mission critical infrastructure. So navigation, guidance, communications, etc. The last grid that we deployed there got feedback from the energy manager for the base. And what he told us is it was the single most important piece of information technology and communications infrastructure from the Mississippi River to Japan. So super critical stuff. And we learned all about maximizing efficiency and how to decrease costs and how to ensure that uptime was a priority, because that was the vector they wanted to model around. So that was kind of how we built our core. And then we gradually evolved. As anybody that's done business with the Department of Defense knows, that it's a really slow developing process. So as a startup company, to bid on only Department of Defense contracts is really difficult to kind of model what you're going to need for resources or personnel or whatever. So we started to shift into more commercial and industrial. So we designed facilities or systems for energy developers. So if you think about it, there's the end use customer, there's the energy developer, and then there's Cleanspark. And so what we would do is work hand in hand with the energy developers to identify what were the vectors that mattered most to their clients. And then we would design and engineer a system that made the most sense. So as we started to get more in the commercial space, we also picked up a manufacturing division where we were actually manufacturing intelligent switchgear for a place for our controls and software to live, and it just gradually evolved. So we outside of the Department of Defense, we got into big box retailers, worked with a great partner in Houston called Enchanted Rock, and we were building systems on all of the HEB grocers and Walmarts and Kroger's all throughout southern Texas. We then got into more heavy industrial. We started to deploy outside the country. We built systems in 7 different countries. And then in 2018, we were tasked with designing a microgrid solution for a digital currency miner. And it was intriguing to us, really flat load profile, but interested in adding renewables, adding energy storage, kind of bridge the gap on the switches so that in the event of a power disruption, you don't lose contact with the blockchain and have to reboot and start everything over again. So that was January of 2018, and it just evolved. We worked with a number of different developers in that space, and then my colleague Zach, right as COVID was starting to rage, had visited a significant data center in Atlanta. Long story there, but we came back and met as a team and made the decision that maybe rather than sell them a microgrid solution, we'd offer to buy the facility and kind of demonstrate in real time what our core competency is and how that management of efficiency and focus on renewables really kind of pencils into a space that had notoriously been an environmental terrorist, if you will. And so it's kind of been an interesting journey. We bought the facility in December of 2020. And as of our last Q, we're, I think, the 4th largest publicly traded Bitcoin mining company in the country.
Wow, that's an insane ride, right? So there's like a lot to pull apart there. My first question is, when you say vectors, I assume you mean like sort of different objectives that these microgrids can have, right? So whether you're talking about maximizing saved costs, minimizing costs associated with the grid, versus constant uptime. Can you walk us through some of the other vectors that
Yeah.
you've been able to install?
So that's a terrific question, by the way. Most people don't understand what I meant by that, and I don't mean to get jargony. So thank you for the opportunity to
Sure.
clarify. So aside from our software that controlled the system, we had a software as a service tool that we sold or licensed to energy developers, and it was called MVSO, Microgrid Value Stream Optimizer. And depending on who the end use customer, they obviously had a different agenda. So if it's an educational campus in Northern California, their focus is on greenhouse gas avoidance. If it's a commercial application, big box retail, shopping center, whatever the case may be, they're looking for cost avoidance. They're looking for energy efficiency. They're looking to maximize the value of energy. And then when you go to the military industrial space, like for example, we built the microgrid in the switchgear at the U.S. Embassy in Beirut, Lebanon. Big explosion there. Fireworks factory blew up. Embassy lights stayed on. Utilizing renewable energy, energy storage, and intelligent switchgear that had the ability to island away from the power grid. So those are the three primary vectors. So GHG, greenhouse gas avoidance, cost avoidance, and energy resiliency. So we would license this modeling tool, and the energy developer would then work directly with the building owner to determine what exactly are the priority of those vectors in what order. And so we would focus on assuming that we were hitting those in order. So military, obviously, if it's communications, guidance, and navigation, it has to stay on. Rolling brownouts be damned. The lights have to stay on. So, shopping center, kind of a different story. Big box retail, resiliency is a big deal. You deal on an educational campus, it's all about sustainability, and they want to avoid greenhouse gases. So look for alternative sources of baseload power. So that's kind of how the evolution worked. But that vectoring tool, MVSO, then fed the data into mPulse, which was our controller, and it would make the decisions. I've got a stack of patents here. And so we're unique in that, as a Bitcoin mining company, I've got a stack of patents surrounding energy generation and distribution. So literally, if you think about this holistically, I have a patent that says we control decisions made by an energy control system if and when to distribute energy to a requesting module. So you think how broad that is and what that application looks like. And we were really kind of an early first mover in that space. So we got some terrific IP protection. We have a fantastic control platform. And that's what kind of led us to the path that we're in and the evolution, I guess, of our company.
Yeah, I'd love to hear how you're applying all that knowledge to what you're doing now with Bitcoin.
So, Bitcoin, the number one cost of mining Bitcoin and supporting the Bitcoin blockchain is energy. And so when we worked with energy developers, we worked both behind the meter and in front of the meter. So what people don't know is that there are points of critical weakness on the U.S. domestic power grid. And so there's places where you have excess generation, and the issue is congestion in the lines in order to move that from one area to another. That's why a lot of the Bitcoin miners are flocking to Texas, because they have surplus generation, but they have congestion on the grid. So what happens, a Bitcoin miner acts kind of like as a spinning reserve. It has the ability to absorb that energy until there's demand, and then allow it to go without restriction to support the grid. So it does a couple things. It incentivizes renewable energy generation, but it also stabilizes the power grid, acting kind of as a load balancing entity. So when you look at, from the microgrid standpoint, how we would balance loads, how we would shift loads and shave peaks, all of that really translates directly into Bitcoin mining. There are times that you have demand response participation. Some of our peers have a financially incentivized demand response. So the utility sends a signal, hey, we're gonna curtail, and they pay them for the ability to curtail to kind of act as that spinning load. Other companies choose to buy a more sustainable energy mix. So curtailment is voluntary, but it's driven by economic factors. So the more you can do from a standpoint of increasing efficiency, there have been multitude of articles that are published about Cleanspark and the fact that our exahash per megawatt and our Bitcoin per exahash leads the industry. Unless you're, factoring it against somebody else that like mines ETH and they say Bitcoin equivalent, then that's different. But like a straight up Bitcoin miner, our efficiencies dominate, and that comes from our experience in, load management, peak shaving, load balancing, et cetera. So it all weaves into the same fabric to get us to where we are today.
Okay, so Matt, I have a question based on everything you just said. It's really easy to just not have to worry about the energy and the greenhouse gas emissions and all of that stuff if you just don't mine the Bitcoin in the first place, as a lot of the critics would say around Bitcoin. It's like, well, let's just not mine it. It doesn't really have any value, so then we don't have to waste all this energy in mining it. Waste in quotation marks. What is your response as the executive chairman of a public Bitcoin mining company to the people that say what your company is doing or what companies like your company is doing for mining Bitcoin at the end of the day doesn't matter because Bitcoin itself doesn't really matter?
So, it's interesting. I have my parents or my mom and older aunts and uncles and different people that we work with. We have members of our board that are older than I am, and I'm in my 50s. So to explain the difference between crypto and fiat currency and why specifically Bitcoin has value is an important designation or differentiation. So Bitcoin provides the ability to stabilize this blockchain, to enable people globally who are otherwise unbanked to be connected to global financial networks. So number one, it's got tremendous value as a currency, and the adoption is only continuing to increase. Second, and it's hard to see based on current macro conditions over the last 6 months, but as a store of value. So different from a fiat currency, I mean, regardless of which side of the political aisle you're on, we just printed trillions of dollars, and those have to be reckoned, right? Where does that lead us? That leads to currency devaluation, and currency devaluation leads to inflation. Inflation leads to slowing of economic progress, and if it slows too much, then you're faced with stagflation. So the differentiator in Bitcoin is 21.4 million. That's it. So the scarcity is designed into the algorithm. So as a store of value and as a viable means of global currency, it really separates itself. Now, the SEC has ruled that Bitcoin, unique from every other crypto on the planet, is a commodity. So it's not a security. It's in fact a commodity. And so it gives access and support to the Bitcoin blockchain that kind of restore trust, because historically there's a breakdown in trust. I mean, everybody looks at their bank statement because they don't believe their bank. Nobody believes the results of elections. The news is biased. It doesn't matter what the topic is. There's an inherent breakdown in trust in society, and being decentralized, having the ability to have transactions validated and verified by thousands of miners the world over creates that certainty. And that's, we believe, the really important first step in rebuilding and restoring the trust that used to exist. Now, beyond that, why do it? Okay, so what's the real value of storing selfies or Christmas lights or clothes dryers? It's obvious. So Bitcoin's an easy target to say, hey, it doesn't really provide any value. It's not worth anything. Why are we using any energy to do that anyway? The counterpoint to that is, in Cleanspark's early days, we designed microgrid solutions that were community-based for communities outside the U.S., specifically working with the Minister of Energy in South Africa to design community-based microgrids to provide access to power to communities that otherwise did not have it. So we designed systems, engineered systems, created a model that had economic value. The problem is that there's a big CapEx investment on the front end of that transaction. And even the World Bank wouldn't be willing to finance those projects without a guaranteed offtake agreement. So my affinity for Bitcoin is it enables us, without geographic restriction, to utilize renewable energy that could be incentivized to be built. I can sign a power purchase agreement guaranteeing to buy that power, which we've done so. In fact, Lancium, one of our partners in Texas, by signing a PPA with Cleanspark for up to 500 megawatts, it enabled them to have access to capital to build out these systems and create that additional generation to stabilize the power grid. So if you look at that globally, we can utilize Bitcoin mining as an offtake for renewable energy generation the world over. And as long as we have access to communications, it literally provides an incentive to develop energy products or projects where otherwise they wouldn't be built. So you look at some of the stuff that we've done. For example, we announced a contract in the state of Georgia. We're in the process of closing on a facility in Washington, Georgia. Town of 3,500 people. It's the oldest town in the state of Georgia, formed in 1777, named after the president at the time. The town square where we met are the steps that the documents were signed to disband the Confederacy. So when we talk history, there's history. This is an old town. But they had surplus power. So by working with the city of Washington and working with the utility, we're able to buy that power that's otherwise stranded. It's generated from nuclear power. By buying in larger scale, it enables the city to pass the savings on to their residents, but also it stabilizes the grid and incentivizes these new projects like Vogtle 2 and 3 that have now come online, all these nuclear facilities in Georgia, to create new generation that otherwise wouldn't exist. And to be that valued off taker, it helps to stabilize the grid. So, you can argue for Bitcoin as a store of value and as a currency, but I also really see it as an incentive to stabilize the power grid on a global scale.
That's wild. Yeah. I'm wondering, does that incentive need to be at a certain level to work? Like, for example, when energy prices get too high or when Bitcoin prices get too low, does that model fall apart? Or like, how can you walk us through how those numbers impact it?
Yeah, for sure. So we're economically incentivized just like any other business. So we announced last quarter, we had EBITDA of $15.2 million on 31 million in revenue. So even with Bitcoin under tremendous pressure and energy prices and inflation at an all-time high, our EBITDA was almost 50%. And there really isn't another business that can do that while providing value. And so when you talk about, is there a point that it disconnects? I think that's economically driven. And quite frankly, we closed on this facility. It's a $19 million piece of dirt with a bunch of buildings and then another $9 million worth of mining rigs. And the guys that built it, their company is called Waha Tech, and they've done a bunch of YouTube videos kind of explaining how Bitcoin works and how it supports the local environment and ecosystem, but not having the financial base that Cleanspark does. They didn't have the ability to enter into big power contracts. They didn't have the ability to post big deposits. So they were disincentivized from operating. So what happens is, even though it's 70+% non-carbon emitting power there, primarily nuclear and hydro, gas prices at the Henry Hub still push energy prices overall up. So you get a company that doesn't have the financial stability. They're now facing increasing energy costs and decreasing value for the Bitcoin. So they're forced to curtail during the period of time that it's hot outside, when there's demand on the grid. So they shut down. So that decreases their profitability, which further impacts the city, because the way we negotiate our agreements is the city makes money when we make money. So we're incentivizing the local economy. They get just a little piece of a penny for every megawatt hour, or a kilowatt hour, pardon me. But that's what makes sense to them, because that then adds to their budget and the ability to continue to add more renewables. So it's all connected. So to answer your question directly, and sorry for waxing philosophically, but it really does make sense that like anything else, if the price of steel goes up, the price of cars go up. If the price of oil goes up, the price of tires go up. If there's a shortage of semiconductor, it has an impact on market conditions. So same thing applies in Bitcoin. When the price of Bitcoin is under pressure and the single biggest cost, which is energy, is on the rise, it creates challenges for some other operators. What that's done for Cleanspark is it's created a tremendous amount of opportunity. June, we bought 1,800 of the latest Bitmain S19 XP rigs. 9 months ago, people were paying $85 to $90 a terahash for those. We're paying under 30.
Oh.
It comes down to having the capital and the ability to execute. The same latest generation rigs. One of our peer group had them plugged in and operating at CoinMint, which is a hydroelectric facility in Messina, New York. It's a decommissioned Alcoa aluminum plant that's re-incentivizing or kind of reinvigorating this industrial town with high tech jobs. And so one of the clients that was hosting there had 1,000 machines they needed to move off, and we paid $18 a terahash to buy machines that are plugged in and hashing.
Wow.
This whole transaction, $19 million for the project. I think it was 26 million overall, but that adds meaningfully to what Cleanspark has done. So in the period of time that Bitcoin's been under pressure, I think last December is when we started to see the weakness, right? We had 1.3 exahash. What we've disclosed is that by month's end will be 4 exahash, and by year's end will be 5 exahash. So we've 3x'd our production. And we've been really mindful of equity. We've been really mindful of dilution. We've used Bitcoin. We started selling it back in November when it was $60,000 a coin. We were panned across the industry with all the purists saying, you don't have a strong enough thesis. You're not a Bitcoin maximalist. You guys are crazy. Well, fast forward to $18,000 Bitcoin. All of our peers are being forced to buy in because they leverage their Bitcoin. And we're continuing exactly what we started, utilizing all three levers of our capital management strategy, using Bitcoin as a tool to grow our business without diluting our shareholders, responsibly using debt to be opportunistic in environments, and using equity only when it's instantly and immediately accretive, which is what we've done. So we feel like the economic conditions have really been our friend. I mean, it's tough times for everyone, but being opportunistic now we believe is going to pay massive dividends in the future.
Yeah. I want to transition from what you said about the massive opportunity to the business side of this. Coinbase, the most popular cryptocurrency exchange, takes a fee off of the value of the currency. So Bitcoin trading at 69,000 means that if they take a 2% fee and someone trades it, obviously they get more than if Bitcoin's at 18,000. Is the price of Bitcoin specifically, when it goes up, is that good for Cleanspark and your business from a macro perspective? The incentives, more people are excited, more people are buying your products, or even if the price is stable as it is right now at around 18 to 24, can you guys still perform and do really well?
Yeah. So our last quarterly earnings report, we had our call last week, and that's where we talked about the fact that on 31 million in revenue, we produced 15.4 million in EBITDA. So we do have built-in profitability. We can definitely survive an additional leg down and continue to thrive. So it's a double-edged sword. When Bitcoin is unique. So if you compare it to the traditional energy space, there's basically a fixed cost of drilling for and producing oil. The variability is the price of the global price of the commodity. Bitcoin has a number of different factors because aside from the price of Bitcoin, you also have the global difficulty. So the more computers that come online, the more difficult it is to mine a single Bitcoin. So aside from all of that, then you layer in energy costs, which are an additional variable. So the Bitcoin algorithm is designed, as I mentioned earlier, to create scarcity. So every 4 years, approximately, the algorithm is designed to cut the Bitcoin reward in half. So as we built the facilities that we own, a big nuclear facility, nuclear powered facility in College Park, Georgia. One of the largest immersion cooled facilities currently operating in Norcross, Georgia, acquiring this new facility in Washington, Georgia. We've got a number of other projects that we're constantly evaluating and in some form of continuing to grow. So when Bitcoin is high and difficulty is low, we're making a lot of money on the existing facilities. It's a great time for us. When Bitcoin is low, energy is high, margins are compressed. A company like Cleanspark that's expressed our desire to be top 3 in the world as far as hash rate capacity and obviously number 1 in efficiency, it just creates more opportunities. So it's a temporary situation, we believe. We also see that the macro conditions are beginning to shift. Obviously, the economic data that's coming out indicates that the economy is starting to strengthen. And then last week, BlackRock talks about the fact that they're going to give their, however many billions of dollars of assets under management, their client base access to more Bitcoin, specific Bitcoin. They didn't say crypto, but Bitcoin. So we believe that with the finite supply and that built-in scarcity, the increase in demand and the realization that even through some really trying economic times, Bitcoin has really weathered the storm and is continuing to demonstrate its value as a store value, as a hedge against inflation, and as a currency. That it's going to emerge even stronger. Now, you were talking about the margins that Coinbase makes on transactions. No different than your online trading account. No different than your Visa card. I mean, interestingly, I had my oil changed and I pulled out my American Express and they said, hey, do you mind paying with your Visa? Because American Express charges a bigger discount rate. So it's something that's kind of built into what we're already accustomed to using. I think where it starts to get crazy is like on Ethereum when there's a lot of congestion and gas fees go crazy for transactions. It creates this kind of, is this really going to work long term? But I think, it's growing and it's evolving. I was given the opportunity to participate on a Twitter space a couple of weeks ago, and it was hosted by the Sustainable Bitcoin Protocol. And Elliot's really a master, true environmentalist at heart, but one of the world's biggest Bitcoin advocates, because he sees it as a means to generate more clean power and to stabilize the grid. On that call, Assemblyman Vanel from New York, and there's a ton of litigation or of regulation being drafted and proposed in the state of New York to control this industry. But Congressman Vanel's on there, and there were global journalists, Asia, the U.S., different analysts participating on the call. And I believe it was Congressman or Assemblyman Vanel that said, Bitcoin is really new, and so it's an easy target. Nobody's going to say, well, you don't really need lights on your house at Christmas time because they don't really provide any value. They make you feel happy, and then you got to put them up. They take a ton of power. What's the ultimate value? So we don't do that because it's part of our daily lives, and everybody just assumes that it's part of the cost of doing business. You post a selfie on your phone, and it's hosted on Instagram or it's hosted on Facebook. That takes a tremendous amount of power to manage those data centers. So Bitcoin, Assemblyman Vanel said, if Bitcoin was a human being, it would still have braces and have acne because it's so young. And I think as we're mindful of that and understanding there are pitfalls that have yet to be found, and there are challenges that we're experiencing in real time. But at the end of the day, we think that the underlying value of the commodity will prove long term to be one of the greatest stores of value. And we've quite frankly bet the farm on it, so to speak, that this is the future of currency.
Yeah, I think that's incredibly interesting. So you're betting the farm on it, but you're one of the uniquely few Bitcoin miners that are willing to sell, and you've talked about that already a little bit. Can you go into a little more detail about how and when you decide to sell versus raise capital other ways, like pulling on the thread that Amit talked about just on the more business side? I'd love to understand where shareholders come in versus selling Bitcoin and things like that. Basically,
why do you have paper hands?
That's a terrific question, and it's a fair question. I'll tell you why. So if I'm operating a gold mine, and I believe that gold, while $1,300 an ounce is undervalued, that's the reason I'm in the business, doesn't make sense to continue to hodl gold and pay for the shovels and the personnel and the tractors and the distribution, and then have the operating expense and the capital expense borne either by my shareholders directly in the form of dilution, or borne by my shareholders indirectly in the form of debt service payments that ultimately impact the value of the company long term. So what's important to note, Paperhand's a great way to say it, but it's not entirely accurate, because we're extremely bullish on our thesis for Bitcoin. When we've sold Bitcoin, we've used that for two things: OpEx and growth. So we pay very, very well in all the facilities that we operate. We sponsor a ton of educational opportunities. We're doing job fairs right now in some of the towns, offering people. I mentioned Waha again. It's cool to look at their video. There's a kid grew up in this 3,500 person town, and he talks about the fact that I would have never guessed that I'd be working a high-tech job in my hometown. So what we're doing is we're finding these opportunities, but you have to pay for them somehow. So 9 months ago, everybody talked about this is an arms race, and whoever has the most machines wins. We looked at it and determined that by adding more machines, it's going to increase difficulty. We were already beginning to see the trends of energy prices going up. So we thought maybe a more pragmatic approach is to invest more in infrastructure, mobile data centers, transformers, immersion cooling technologies, big dry coolers, switchgear, all of the components that are necessary to successfully operate a mine. So fast forward 8-9 months down the road, we're buying miners at 60% less than what everybody paid for them and pre-ordered back in September. I mean, I don't want to go too far down a rabbit hole, but when some of these companies ordered $1 billion worth of rigs, they had to put $500 million down, and that money has to come from somewhere. So they do an offering and dilute their shareholders, and then they sit on that deposit until the machines, which are now arriving, begin to arrive. And they made those commitments 9 months ago. We looked at it differently. We're going to use Bitcoin opportunistically for growth. We're going to use Bitcoin to cover our OPEX because we felt like there was too big of a value disconnect in where our share price was and what our actual value is. And for a period of time, we had a $100 million market cap and $450 million in assets and a $200 million annual run rate. It doesn't make sense in that environment to use stock to grow the company because at the end of the day, we're all shareholders. I mean, my colleague Zach and I, we have a big grip of options, and our options are currently priced at $23 a share. So, we're incentivized to see the share price go up. So we made the decision that if we're spending this money to increase our efficiency, to give us access to mining more Bitcoin while being mindful of dilution and not entering into any crazy leverage agreements where we're leveraging our Bitcoin and leveraging our facilities, now we're being mindful and disciplined in our overall fiduciary duty to our shareholders. So fast forward to last month. I mean, we talked about the fact that we used equity a little bit. So you're telling me you used equity at $5 when you didn't use it at $14. Why does that make sense? Well, quite frankly, when the stock was $14, buying new mining rigs were $85 a terahash. Stock's $5, we're buying at $18 a terahash. So when you look at it globally, we're actually delivering greater value using a little bit of equity at a lower price to be opportunistic in the space, which is what we feel really strongly about. Meanwhile, our peers are being margin called or forced to sell. Massive companies like Core Scientific are having to sell, 7,000 coins to shore up their balance sheet. You got companies that have done some creative leverage on the coins that they hold. And quite frankly, when some of these third-party firms were taking unnecessary risk, promising 18% APY on the deposits that you place with them, that works great as long as Bitcoin go up. That's this phrase, right? Bitcoin go up. But if it doesn't, how do you pay those returns? And then what it does is it makes people question the validity of the underlying commodity and why is it not something more risk on. And so we see that from a business perspective, choosing when to use equity, looking at the accretive value of that transaction. So if we were able to move a few shares, put it immediately to work, that's one big measurement. But secondarily, it doesn't make sense to sell shares of stock or to incur debt to put deposits on rigs that you're not going to see for 3 fiscal quarters. So by using Bitcoin, it enables us to be strategic and be more quick to act. So, that 1800 XP order, that 1061 order that's a coin mint, the new transaction with Washington and a number of others that are in process, that comes from the ability to be nimble and to make quick decisions. And we're different from everybody else in the space. There are companies that were 100% hodl. Well, yeah, but you've now tripled your outstanding shares. So as a shareholder, if you have 10 million shares and you do 100% hodl, but you continue to sell shares, and now you have 100 million shares, you've diluted me down. So Bitcoin has to go up 10x for me as a shareholder to get that same meaningful return. Now, I think we all have we've all read the articles, right? That Bitcoin's going to 500K. Absolutely likely, possible, definitely, but not this year. And so how can we maximize the value to our shareholders by being strategic with where and when we use it and by being willing to use Bitcoin? So, yeah, we got panned, but now everybody else is saying that we're using this new strategy to sell some of our Bitcoin to shore up our balance sheet. We just happen to do it 300% higher in price than everybody else.
Yeah. Yeah, that's really strong governance. That makes a lot of sense.
That was the best explanation for paper handing I've ever heard. Matt, do you think that decentralized protocols, apps, maybe social networks, obviously decentralized financial systems, do you think that is the future if Bitcoin gets to that 500K? Can you speak a little bit philosophically on how you see the world kind of decentralizing?
So this is, I think, the biggest problem in society today, right? Depending on where you sit politically, you have the opinion that one side or the other is corrupt. One side or the other is manipulating data. One side or the other is controlling election outcomes. In 2016, it was, the Russians bought the election. In 2020, nobody believes the result, or we're protesting and saying it was fake. What that distills down to fundamentally is that centralized anything is just an invitation for corruption. And so by decentralizing and creating stabilization through decentralization, that's what we learned in the energy space. The macro grid in Southern California, the macro power grid, is inherently vulnerable to all different kinds of weather factors, whether it's wildfires or just heat waves, wind, any number of issues. In Texas, it's ice. So the ability to have a decentralized power grid where you have multiple points of generation that can operate autonomously and independently one from the other, but ultimately can work in concert to stabilize the overall. How does that same argument not bear fruit when you're talking about global financial markets or global communications markets? I mean, it's interesting how the I don't want to wax too politically, but everybody that drives an electric car is a big advocate for environmental responsibility and tend to be leaning more one side of the political spectrum until you get Elon Musk that says, hey, I'm going to vote Republican for the first time in my life. Well, now everybody sees Elon Musk as something different than what he was perceived to be a few years ago. And so we have this divisiveness. And so you look at even Twitter, right? So it comes down to controlling the narrative, who's fact checking the fact checkers, all that stuff. So at the end of the day, decentralization and having information vetted and verified outside of a single source is the future. And it's really the only way that we rebuild trust. So we see it as tremendously important, not only in the digital currency or the global currency markets, the commodity space, the security space, the communication space, but the energy space, and in fact globally, because if one person controls or one organization controls that flow of information or money or whatever the case may be, there's going to be other components that are vulnerable, and so we think that we're at a real tipping point in society about what decentralization means, and it goes across all of those individual spaces that I discussed, and we really feel like it's a powerful time to be alive.
Yeah, I think there's something so poetic about your company starting with decentralized energy solutions and now being a decentralized finance, solutions provider essentially by mining Bitcoin. Can you speak a little bit about what will happen to your energy business now? Like you're applying it to your Bitcoin mining, or you're going to sell it off and let it be its own business? What happens to the microgrid side of Cleanspark today?
So we talked on our earnings call that if you're investing in Cleanspark, you're now investing in a pure play miner. I mentioned we made $15.4 million earnings before interest, taxes, depreciation, and amortization, but we posted a $27 million loss. What that's accounting rules did a couple of things. Number one, during that quarter, there was a big spread in the price of Bitcoin. So we're forced to write our Bitcoin down to the lowest point. We also then said that our energy business, while we're in active discussion to sell that business, because we're not actively growing that business, accounting rules require us to push that into I'm drawing a blank on the accounting term, discontinued ops. So we push the energy business into discontinued ops, and it adds $10 million onto our quarterly loss. Now, did we actually lose that money? No, it's on paper. But because we had to record it as disc ops, now we're not recognizing that as an ongoing component of our business. The quarter before that, we did $44 million in total revenue. 4 million of it's the energy business. 80% margins on the digital currency business, 4% margins on the energy business.
Yeah, wow.
So you get an analyst that looks at the blended average, and it's like, okay, you idiots, you're spending all this money over here, and your ROI to your shareholders is decreased because of your passion for energy. So at what point does it become a wise business decision to look to bifurcate the businesses, move on from that? But most importantly, energy is our DNA. Every single thing we do is focused on energy first and foremost. So by understanding how our interoperability works with the grids, how we work behind the meter, in front of the meter, how we work with the utilities, how we work with energy storage, what it means to add renewables on site versus incentivize other developers for adding more renewables. That's core to who we are, which is why, I don't mean to brag about us being the best, when I talk about exahash per megawatt and Bitcoin per exahash, but I mean, we just are. And it comes from being thoughtful about that approach and being disciplined and not taking unnecessary risks. But at the end of the day, everything is energy, and energy is everything. And if we can manage our energy and increase our efficiency, then we win.
I love that.
Pretty good explanation for that. No, that makes a lot of sense. I guess we're wrapping up here in the broader scheme of it. But so when you said on the earnings call, you told shareholders that investing in Cleanspark means it is a pure play in mining. Is there another level to the business that you guys could ever see taking it, just throwing it out, like in a lot of different ways? For example, expanding to other cryptocurrencies. Maybe the business starts to do really well. You start giving out yields. Like, is there any world in which you see you guys expanding in the crypto world, or is it going to be always just pure mining?
I think so. Giving out yields, paying dividends. We talked about the fact that it's really important to us to return capital to shareholders. So how do you do that? Do you pay dividends? Do you buy shares back? We're open to all of those. Right now, what makes the most sense is maximizing the value for our shareholders by increasing our production. Now, we've looked at a ton of other opportunities in the space. We looked at mining Ethereum, and with what's going on in the merge supposedly happening next month, there are going to be a glut of miners, Ethereum miners, that are available on the market. And what that does to that side of the mining business is anyone's guess. So what we do know, and I don't mean to go too far back in our history, but when we bought this company December of 2020, the principal is a guy by the name of Bernardo Schuckman, and Bernardo still serves as our SVP of data center ops. Bernardo is an OG miner. I have an audit from BDO, and prior to our acquisition of the Atlanta facility, he provided us this audit. And in his career, he's mined more than 50,000 Bitcoin. He's done it all around the world. He's set up mines in China for Bitmain, understanding the difference between hydropower and grid connected or grid disconnected versus carbon-based power and coal-fired power plants, and different jurisdictions, and geographically what the differences are, and how you maximize the energy that you use, and how you control heat, how you use heat to your advantage, a number of those factors. So having the skill set that we have and the personnel, we think that we've created, quite frankly, an all-star team. Our immersion mining facility in Norcross is absolutely world-class. I posted a couple of videos on my Twitter that I'd invite you to go check out. Or if you guys would like to come down there and do something live, I'd be happy to give you a tour, explain, how air cooling works versus how evaporative cooling works and how immersion cooling works. And they're all different. And so what we do is we do it in how you eat an elephant, right? One bite at a time. So it's kind of that same approach. When we started immersion cooling, it was rather than plug in 20 megawatts of machines and flip the switch and pray, we energized circuits one at a time, and we mess with how many machines are in a given tank as far as density, and then how do we focus on removing the heat from that tank to increase the efficiency. And then there's another thought, and it's like, okay, so we upgraded the firmware so we can now overclock these machines, but by overclocking, it takes more power. So does overclocking fewer machines in a tank create greater value, or does underclocking, also an option, more machines that then consume less power make sense? So we've created this model where it's measure twice and cut once. So we're very disciplined in the way that we deploy capital, and we're disciplined in the way that we expand our facilities specifically for that reason, because there's a right way and a wrong way. You've seen a lot of people that jumped into this space when Bitcoin was 60 grand and difficulty was low because China banned it. Anybody can make money. It's like the early days of cannabis, right? Anybody that's a fan of cannabis wanted to be in a cannabis business. And then you get corporate operators in that space, and all of a sudden margins matter. And so it's very much the same in Bitcoin mining, and it's industrialized. It's at an institutional level. Our two biggest shareholders are BlackRock and Vanguard. The reason that they're big investors in CleanSpark is because ESG is a hot button thing, right? You either love it or you hate it. Is it virtue signaling or is it not? And Exxon's an ESG company and Tesla's not. And is it because it's a centralized decision gate? All of that stuff aside, the principles for ESG, environmental, social, and corporate governance matter. And so by being laser focused on building our company around those principles, whether it's ESG or not, that enables companies like BlackRock and Vanguard with the wealth of funds, the ability to make a decision to invest in a company like CleanSpark, because we didn't just dust off a coal plant and plug in Bitcoin miners because planet be damned, we're going to make money. This is about creating a balance and creating a future. We're training people for careers, not jobs. I'm a dad of 6 kids. We have a job. We have a duty to be better stewards of our planet and to leave the place better than we found it. Does that mean we need to shame somebody about their business approach, or do we need to, not like the guy that drives the diesel truck? No, I mean, there's a balance, but there's a purpose for what we do. And I think we've been really disciplined. Huge credit to Zach, our chief executive officer, and the executive team, because there are some knockdown dragouts in our Vegas office, and there's no sacred cows. If there's a disagreement, we'll push back and forth. We'll argue, we'll debate respectfully, but we come to the conclusion that, we analyze things. If this all were to go to hell and I'm being cross-examined, why did you make this decision? I have to be able to substantiate that there's a basis for the choices that we've made. And so throughout this whole process, it really comes down to doing it the right way, focusing on the things that you do right. We know energy, we know Bitcoin. I don't want to mess with Ethereum. I don't want to mess with NFTs. I'm not saying it'll never happen, but I'm saying what we do best for our shareholders right now is exactly what we're doing.
That's awesome. That makes me really proud to be a shareholder, for sure.
Right on. I'm glad you are.
Yeah, me too. And I definitely would love to take you up on that offer for a tour.
Definitely. Yeah, we got to see what you guys are cooking up there in Atlanta. It sounds interesting, for sure.
For sure. I think you've given us a lot to be excited about in the present and in the future. I'm excited for Bitcoin to return to much higher prices, and I'm excited to keep up and keep in touch about all the great stuff that you're doing on the energy side and on the Bitcoin side, and how you're helping the world by slowly decentralizing things that need to be decentralized.
Thank you so much for having me. This has been a great opportunity. It's really been fun chatting with you guys. Sorry if I get a little fiery, a little passionate. I'm pretty proud of what we're doing, and I love the opportunity that we currently have.
Sure.
Absolutely. Thank you, Matt. Appreciate it.
Thanks, guys.
Thank you for your time. This is really awesome.
Appreciate it.